price wars, shrinking yields, and serious liquidity issues. Time Out named it the coolest neighborhood in Asia. The rules of the game will change. Not easy, but possible. But if you dig deeper, the picture changes. Hi everyone, Anton here. For 3 years, I was one of the top salespeople working with Bali's largest developers. I sold pretty much any project, presented Bali at thousands of conferences around the world, and knew exactly how to package and promote real estate in Bali. Now I'm on the other side of the barricades and I openly talk about which projects aren't even worth a presentation. Today we will break down which areas of Bali actually make sense for rental property investments in 2026, where demand is growing, where you can still enter at a reasonable price, and where it might already be time to exit. We will move clockwise around the island, starting from Canggu, then Ubud, and finishing in Bukit. Let's go! Canggu, the island's showcase. Canggu has been the undisputed champion of past years and remains the most popular tourist area on the island. That said, from an investor's point of view, it's no longer the most attractive option. On the surface, the number looked decent, high occupancy and solid nightly rates. And with almost 3,000 active units, Canggu still rightfully holds the title of Bali's most popular area. But if you dig deeper, the picture changes. One-bedroom units average only $100 per night at 82% occupancy. And for the third year in a row, we are seeing decline in prices and occupancy. The reason is simple: brutal competition and aggressive price dumping. On top of that, within the next 1 or 2 years, at least 500 new business plus class apartments are expected to enter the market, increasing supply by roughly 50%. As a result, price wars, shrinking yields, and serious liquidity issues. Selling such a property won't be easy. Resale will be almost certainly require discounting. 2-bedroom and 3-bedroom units look more stable. However, even here, demand may partly shift towards cheaper 1-bedroom units if prices drop significantly. That said, properties with at least 25 years remaining on the lease are far more liquid than 1-bedroom units with shorter terms. As a conclusion, you can still invest, but only in 2-3-bedroom properties with a unique concept, strong management company, and a 30-plus year leasehold. The goal is to hold for around 3 years and still leave a solid remaining lease term for the secondary buyer. Even then, remember, resale in Bali, especially in Canggu, is hard. Investment horizon up to 3 years. Perinan, a balanced alternative to Canggu. Perinan has been a real discovery in 2024. Time Out named it the coolest neighborhood in Asia, thanks to its mix of authenticity, calmness, and modern infrastructure. Competition here is still much lower, 1,176 active units compared to nearly 3,000 in Canggu. 1-bedroom units show 84% occupancy at $108 per night, and the area hasn't yet reached its infrastructure peak. Growth in tourist traffic is only a matter of time. In the 2-bedroom and 3-bedroom segments, the picture is close to ideal: high occupancy, limited competition, and no aggressive price dumping. But please note, Perinan, Siseх, and Chimagi are considered priority zones for environmental preservation. So, main recommendation is very simple: always consult professionals and conduct proper due diligence to avoid buying land not approved for commercial use. As a conclusion, Perinan is clearly on the rise and may reach its peak within 1 or 2 years. Best strategy: premium 2-3-bedroom properties with a 3 or 5 years horizon, targeting capital appreciation and stable rental income. 1-bedroom units can also work, but only in above average quality projects with strong, experienced management company. And always think like your future buyer. Would you buy a property with 20 years left on the lease or 25 years? And what yield does it still make sense? Siseх, a premium area with a future. Most real estate professionals see Siseх as a natural next step in Bali's development. Green rice fields, space, tranquility, but most importantly proximity to massive Nuanu project, which has already attracted international investors and funds, all around the world. Once Nuanu is fully operational, the rules of the game will change. The main challenge today is accessibility. A single road and frequent traffic. The government for sure is working on improvements, but timelines remain uncertain. Rental performance, especially for 2 or 3 bedroom, is among the strongest on the island. As a conclusion, CCR is a 5 to 7 years investment. The key is entering premium project with a long leases and guaranteed extension. This keeps the asset attractive for future resale. 1-bedroom units also are acceptable here and can perform well. An ideal strategy is 8% guaranteed income for the first 3 years, allowing you to wait out the area's maturation phase and benefit from future growth. Chimagi and Nyani, a bet on tomorrow, immediate proximity to Nuanu and very limited development make this area some of the most promising on the island. Rental prices are still growing, but demand is already strong due to minimal competition. But transport access remains the main bottleneck, same issue as CCR. These areas will almost certainly become some of Bali's most attractive investment zones. The only question is when. As a conclusion, delayed effect investment with a 5-7 years horizon. Enter now, secure a long lease with guaranteed extension, wait for the trend to arrive and capture upside later. Guaranteed income strategies also work well here. Ubud, a stable long-term base. Ubud has always been Bali's cultural heart. Rice terraces, volcanoes, temples, spirituality. This is what made Bali world famous. At first glance, average statistics may seem weak, but they are distorted by budget guest houses and poorly managed properties run by locals. Another issue, blurred boundaries. Developers often market projects 30 to 40 minutes from the center using income data from central Ubud, a classic trap. Tourists typically choose location within 10 to 15 minutes of the Ubud Palace or Monkey Forest. An additional 750 new 1-bedroom units are expected soon, putting further pressure on that segment. But professionally managed villas tell a different story. For example, Foresight 24 properties show 83% occupancy at $191 per night, proof that Ubud rewards quality and concept. Conclusion. Ubud is 5 to 7 years play. The main recommendation focus on villas and wellness-driven, authentic projects close to the center of Ubud, but not generic copy-paste apartments. Location and concept are everything here. Sanur, the return of classic. Sanur was one of the Bali's first tourist areas and was originally planned as a second Nusa Dua. 2 years ago, it was officially declared a special tourism economic zone. Major investments are coming in: massive medical hub, a cruise port and premium waterfront mall. Logistically, it's one of the best connected areas on the island. While 1-bedroom rates are lower due to aging stock, 2-bedroom and 3-bedroom units perform exceptionally well, especially for families and medical tourists. As a conclusion, Sanur could re-enter Bali's premium top tier within 3 to 5 years. Primary market supply is extremely limited there, making any quality entry especially valuable. Nusa Dua, a premium package tour hub. Beautiful beaches, international hotels, postcard visuals, but tough competition. Private investors struggle against 5-star chains with massive brand power and loyalty program. 1-bedroom units suffers most, while 2- and 3-bedroom properties still hold up with the right premium concept and a good management. As a conclusion, Nusa Dua not easy but possible only with premium differentiated products such as huge 2- or 3-bedroom villas with the oceanfront view. Kutuh, Bali's most photogenic beaches. Stunning locations like Milasti and Pandawa, but weak infrastructure and massive future supply. With more than 1,000 new units planned, mostly studios and 1-bedroom units, pressure on the market will be significant. As a conclusion, avoid mass market products. Only boutique premium formats make sense here. Uluwatu, the island's scenic frontier. Cliffs, sunset, ocean views and rapidly growing infrastructure. Numbers are strong across all segments, but future risks lies in nearby overdevelopment. As a conclusion, at least 5 more years of solid demand, but choose wisely. Ocean views must be real, not drone illusions. So that's it for today. We have covered the key investment areas of Bali. Where to invest, the decision is almost yours. And if you want to invest without illusions, please subscribe on my channel. Here we will have a lot of new videos with market statistics and reliable data.